All of our productions at GCTV are brought to you in part by The Arbors at Greenfield, assisted living community providing a unique balance of independence and personal care that offers residents and families the most precious gift of all, peace of mind. Bay State Health, providing the care you and your family need when you need it, close to home. Visit them online at baystatehealth.org. Greenfield Savings Bank. Visit them at 400 Main Street in Greenfield. Call them at 774-3191 or go online to greenfieldsavings.com. The Hammond Family. The Hammond family are longtime supporters of Greenfield Community Television. New Fortune Chinese Restaurant on the Mohawk Trail in Greenfield. Visit them online at newfortunema.com, call them at 773-0838, and check them out on Facebook. People's United Bank, located at 45 Federal Street in Greenfield. You can call them at 774-3713 or visit them online at peoples.com. Thank you to our sponsors for supporting all the productions at Greenfield Community Television.
Bill here, the Municipal Modernization Bill. We're going to be hearing first from Lauren Peters, who's both the Legislative Director and the Director of Healthcare Policy in the Executive Office of Administration and Finance, and from Kathleen Colleary, who's the Director of the Bureau of Municipal Finance Law at DOR's Division of Local Services. So both people with lots of interesting municipal experience to share with you and tell us a lot about the details of this law, and hopefully many of you know about it and have questions. So thank you both very much for making the long drive. Sure. I'll turn it over to you, Lauren.
Great. So thank you for inviting us here today, and thank you to the Senate President for having us to discuss the Governor Baker's Municipal Modernization Bill. As Phoebe said, my name is Lauren Peters, and I'm the Legislative Director in the Executive Office for Administration.
Is the mic on?
No, I don't think so.
Try now.
Is it working now? Oh,
yeah.
I think it's on. So as Phoebe said, my name is Lauren Peters. I'm the Legislative Director in the Executive Office for Administration and Finance, and I'm joined by Kathleen Colleary, who heads up the Municipal Finance Law Bureau in the Division of Local Services. So thank you for joining our panel discussion today and your interest in the Governor's bill. We're excited about a lot of the proposals in here and believe they will make your jobs as municipal officials easier. So in terms of the approach we took to developing the bill, it was an inclusive process involving working with local officials, both elected and appointed, and with various professional associations that represent specific fields of municipal finance, including assessors, collectors, treasurers, auditors, and procurement officials. So last April, the administration surveyed municipalities about what changes state government could make to improve their ability to deliver quality services to their constituents in a more cost-effective manner. This survey generated over 1,300 suggestions from over 235 municipalities and school districts. In addition, the Lieutenant Governor has met directly with officials from more than 130 municipalities. So most of the bill comes directly from these interactions with those officials in cities and towns who must work within the current laws and regulations. So we believe it is representative of the issues we heard from municipal officials. The outcome is a bill centered on 4 essential principles that will strengthen the partnership between state and local government. So these, as you can see, updating, eliminating obsolete state laws, promoting independence at the local level, and being smarter about streamlining state oversight, and finally, providing municipalities with greater flexibility. So this bill reflects the fact that expectations have changed concerning municipal government, ushering in significant improvements in professional management, and that advances in technology have profoundly changed the manner in which municipalities operate. So before turning it over to Kathleen, who will detail some of the provisions of the bill, I want to provide a brief update on the status. So the bill was filed by the governor in December. It was divided up and referred to 5 different joint committees. To date, all but one of those committees have reported it out, and all of them have reported out favorably. So the one remaining committee is the Joint Committee on Municipalities. And they are expected to report it out in mid-May now. So we hope that in working with the legislature, we can see this bill pass by the end of this legislative session, which ends in July. So I will now turn it over to Kathleen, who is our resident expert on municipal finance law, and she was really instrumental in the development of this bill.
Thank you, Lauren, and good morning, everyone. We're very happy to be here today and present some information to you about the Municipal Modernization Bill. Lauren went through the process that we engaged in developing this. It includes a wide range of proposals, many of which relate to municipal finance, and that was the area where the Division of Local Services, of course, since that's our bread and butter, reviewed the various proposals that came in from local officials, and we had some of our own proposals too of things that we thought were obsolete, unnecessary, and could be improved in terms of state oversight and local finances. So I'm going to run through very briefly the basic municipal, some of the, what I think are the most or the key proposals relating to municipal finance in the bill, and then we'll turn it over to Lauren to review some other proposals, and then we'll take questions. All right. So the bill includes a wide range of proposals dealing with municipal finance matters, including all of the particular topics here, and I'll kind of run through the key ones in each category. So with respect to the Division of Local Oversight Duties, as you know, the Department of Revenue, particularly the Division of Local Services within the Department of Revenue, has what is referred to as supervisory responsibilities over the area of local tax and finance. We have very specific statutory duties, as local officials do in this area as well, and certain powers and duties. And to be frank, many of them date back to the late 1800s and early 1900s, and some of these statutes have not been touched since, really. So we decided it was time to take a look and recognize that the times have changed, obviously. Communities have home rule powers. The relationship between the state and municipalities is quite different than it was in the 1890s and early 1900s. And over the last, certainly the 30-plus years of my career at local services, there has been just a huge improvement in the level of professionalism, the training, the expertise that we have in our municipal finance officers. There's been tremendous work done, particularly in the assessing area, which is a credit to both state and local officials. And the use of technology has really dramatically changed the ability of communities to conduct a lot of the basic financial operations of government. So what we did was we went through all of the statutory duties of the Division of Local Services, and we tried to eliminate a lot of those that we thought were completely obsolete. There were a lot of what we thought were duplicative reports. There were requirements that, you know, the assessors or other officials get prior approvals from us in order to do certain things that were part of their core responsibilities. So we eliminated a lot of those. And in particular, I'd mention that we updated the statutes that related to the powers and duties of the Director of Accounts over municipal accounting and finances. Some of these statutes, as I said, went back to 1910. They reflected the original mission of the director to actually go into communities, install a uniform chart of accounts, paper systems, ledgers, and so forth, and do periodic and forensic audits. Well, I've been with the department since 1980, and we stopped doing that before that. So we updated it to reflect what really is the current mission, to set minimum standards for accounting practices in the municipalities and to encourage and promote best practices with respect to audits and other financial procedures. We did a lot with respect to local assessing statutes too that, as I said, required assessors to submit requests for us to approve them to do different things that it's part of their bread and butter. It's what they do day in and day out, and it's a rare exception. Why do they have to come to us and get approval? So we did a lot in that area. I think one of the key proposals with respect to our oversight and the area of assessment administration has to do with our proposal to extend the period of time for so-called triennial certification from 3 years to 5 years. And what we're talking about, of course, is the requirement that every 3 years the Division of Local Services, Department of Revenue review local assessing practices to ensure that the assessors are keeping their values at fair market value, which was a very a long battle to get that done, and the assessing community has done a tremendous job in that area over the last 30 years. So we think it's time that period can be extended from 3 to 5 years. The use of technology has enabled the assessors to review their assessments every year, analyze current market information, and make adjustments in intervening years as necessary. So with that and the minimum standards that are now in place and have been adhered to for many, many years with respect to assessing, we think that that proposal makes a lot of sense, both for local officials and for us at the department as well. We'll be able to do a lot more work with communities on a 5-year schedule in terms of providing technical assistance and so forth when there are fewer communities each certification year. One of our other major proposals had to do with the central valuation of telephone assets. As you may know, obviously, generally, your local assessors are valuing all your taxable personal property, but there are 2 exceptions where the values are established by the Department of Revenue, and that has to do with telephone company, personal property, and certain pipeline, interstate pipeline personal property. And we value poles, wires, underground conduits, and certain machinery that's generating machinery. This statute that we're operating under was enacted in 1915, okay? So in 1915, everybody knew what the telephone company was, right? It was a corporation, it was a regulated monopoly, there were a few small regional companies, but there was the telephone company. Well, obviously things have changed. We've had deregulation of the telecommunications industry. We've had technological advances in telecommunications equipment and capabilities, the abandonment of the old copper legacy systems and introduction of fiber optics and wireless technologies, for example, and also the creation of new types of business entities. And all of this has led to over 10 years of litigation that many of you may be aware of because your overlay accounts have money reserved for abatement exposure that you have with respect to this litigation. There's been litigation over what is a phone company under the statute, because the statute doesn't have a definition as currently written, because it didn't need a definition in 1915. And what business, depending on the form of business, what assets are taxable, as well as the valuation methodology that the department uses to value this property. So what we tried to do was come up with an objective definition of telephone companies, and really we went back to the origins of the statute. It was to do central valuation of a network, and we went back to the definition of really the phone companies that are called incumbent exchange carriers, ILECs, incumbent local exchange carriers. Basically, these are the companies that are required to provide service on the retail level to anyone within their service area, okay? Just like when they were a regulated monopoly. So we proposed that. We also proposed a couple of changes that we hope might mitigate some of the litigation by allowing a party to not immediately, when they get the values, file an appeal as a protective measure, to wait to see whether the other parties file appeal, and then they will have an opportunity within a reasonable period of time to take an appeal.
Excuse me, on those overlay accounts, you know, practically every town has got this problem. You know, we've got this ATB thing hanging over our heads with ATB.
We know.
And I'm sure Southampton isn't unique in this respect. Should we be trying to reserve money in, you know, the overlay accounts in the event of, you know, our owing them something, or should we just?
Well, the assessors should make sure that whatever overlay they set in every year is sufficient to cover any appeals of the phone companies as well as the appeals of any local values. They should be doing that, yes.
I don't think we've got a clue what that amount would be.
I think, well, I can talk to you about it afterwards, but yeah, there are some difficulties with it, obviously, but it is a problem. And there's ongoing litigation. There are 2 more trials scheduled, another Verizon trial. There was just another trial, and, you know, where it will end, we don't really know. But we would like to see if we could at least limit a number of companies that we centrally value. I mean, the assessors in the communities already value networked assets of your gas, your electric, your cable companies. Really, at this point, how different are these companies from cable companies? They're all kind of morphing into, you know, one type of telecommunications company. So the next proposal, which I think is, I'm sorry.
Does that include the wireless networks?
No, the wireless, there was litigation on that, and the wireless companies, the Supreme Judicial Court decided that they were not telephone companies for purposes of central valuation. So your assessors do value those. Yep. The next proposal has to do with the state-owned land valuation program, and I think this is of interest to many of you in this part of the state, where you have many state-owned land sites, forests and so forth, particularly in this part of the state, that are subject to reimbursement under this program. And as many of you probably know, every 4 years we determine the values of the program, we certify them, there is an appeal process. There are 296 communities that have reimbursable state-owned land. So not all state-owned property is reimbursable under this program. But, and there are over 500 acres of reimbursable land that we value every 4 years. This is pretty labor-intensive for us, for your local assessors, because as time has gone on and assessing practices in the state have improved, we've relied more and more, as we should, on the land valuation schedules that your assessors have developed to value similarly situated, you know, land in your community that's privately owned. And there's litigation, so you have sometimes municipal council's expenses, the ATB, and so on and so forth. And there's a very short appeal period. So this is a very cumbersome and really inefficient way to distribute the amount of money that's appropriated in the state budget every year for this program, which is about 0.06% of all municipal cherry sheet aid. Okay, so it's a very small cherry sheet program. 53% of the communities are reimbursed less than $50,000. We have one community that gets $2. I mean, really, you know? So we wanted to come up with something that kept to the concept that the legislature has enacted, that is sort of a property tax concept, valuation times a rate, and come up with values that were more predictable, that would be updated on a more frequent basis so they would be a better product, and would be more explainable. So our proposal is to do the next scheduled state-owned land valuation, which is in 2017, really have a solid base of data and good values based in major part on your local assessor's most current values. And then develop a per acre price for your community, which will be used to adjust your state-owned land valuation every year for acquisitions and dispositions. And what we would do is we would take that base and we would take that per acre price and adjust it every 2 years based on an analysis of the market in your community that we do every 2 years called the equalized valuation. So we would be updating these every 2 years so that they would reflect more current market values, and we would not have the spikes in value that you have with our values, and similarly that you would have in your community if you didn't revalue for 4 years, if your assessors didn't revalue for 4 years. So we think that this will really be a big improvement. We think that the values will be more current. It will be a better, more solid valuation product as a basis for distributing whatever amount of aid that the legislature and through the budget process is allocated each year to that program.
Another quick question. A lot of this is state forest land. Do you think it would be appropriate for a municipality to assess watershed property that's owned by an adjacent community on the basis of what you come up with for the state-owned land?
No, that land is exempt from taxation. Land owned by another municipality in your community is exempt from taxation. However, depending on when it was required, the community is required to make the host community a statutory payment in lieu of tax. That payment formula is in the statute, so your community has to follow that. But that's a very good question, yeah. All right, so a couple of other things I just want to run through quickly on governance issues. We have a proposal to allow your local executive officials to initiate a charter change. Right now, the mechanism under the statute is through a charter commission. So they would be able to initiate it. Obviously, it would still have to go through then the process of the commission, the development of the charter, the presentation to your taxpayers. For those of you, particularly in this part of the state, that still operate under the basic sort of statutory form of town government with decentralized elected boards and officers, some of your executive secretaries or town administrators function in terms of their term under a state statute rather than a charter or a special act. And right now, those terms are limited to 1 or 3 years, and this would give communities greater flexibility to permit appointments of anywhere from 1 to 5 years. Again, and particularly out in this part of the state, many communities have most of their finance officers continue to be elected. There has been a trend in recent years of going to appointed collectors and treasurers. There's also been a trend to combine those offices. There is a statute that allows a community, a town, through its own process, legislative body and a vote, to convert elected positions to appointed positions. But there is no procedure now to combine the collector treasurers. In that case, they would still be separate positions. We propose amending the statute to permit that. We have a number of significant proposals in the area of financial management, and I think one of the ones that would be welcome, again, particularly in this part of the state, where we have many elected or appointed part-time boards that constitute the head of their department. In order to approve bills, the entire board or a majority of a quorum of the board at an open meeting have to vote to do so. There's a statute that permits the multi-member boards to designate someone to approve payrolls for obvious reasons. It's necessary to get those payrolls out the door in a timely way. We're proposing to allow the same thing with respect to the payment of bills at the department level, and then with respect to the approval of bills and payrolls by the select board in a town, to have the select board designate one person to approve those warrants and then report back to the full board at the next meeting. And that should really make the processing of your bills and your payrolls much more timely and efficient.
Does that extend to school committees as well?
Yes, it would. There's also a provision that would, a local option to allow, to require actually direct deposit of municipal paychecks. We've had that at the state level for many years. It's mandatory that it be direct deposit. Many of you probably have this in your community already through negotiations or through other processes.
Excuse me, I'm sorry.
Yep.
The one on the previous slide that you didn't talk about,
Yep.
transfer authority, could you
Oh, I'm sorry, I skipped that. Yes, thank you. So there's a statute right now that, as you know, governs the transfer of appropriations that you make. Ordinarily, your town meeting, or if you're in city, your city council, if you have a legislative body, have made appropriations for the year. And in the ordinary course, the only way to transfer money from one item to another is by going back to the legislative body. Several years ago, the legislature enacted a provision which we call the end-of-year transfer provision, which allows, in a town, the select board and the FinCom to agree to be able and allow them to transfer money from departmental line items to other departmental line items. The exception are the school department and light plant appropriations. There's a cap on the amount that can be transferred using this procedure of 3%, so you can't transfer more than 3% of any line item out under this end-of-year procedure. And you also, it has to be a departmental line item. It cannot be one of your sort of unclassified line items, like a line item for debt service or health insurance. So what this proposal will do is eliminate the caps and allow the transfers, this end-of-year transfer process, to apply to any appropriation, except the school and the light plants. Those are still restricted. In order to transfer money from those line items, if there is extra money at the end of the year, you have to go back to the legislative body, which is what the statute provides now. Yes?
Except school and what?
The light plant, if you have a light plant.
Like municipal, like.
Municipal light plant. Municipal light plant? Do any of you have municipal light plants? They have budgetary autonomy, and that, I think, and the school department does too in terms of the bottom line autonomy. So I think that was probably why the legislature accepted those two departments from those provisions.
Excuse me, it's a 3% limit on transfer?
It is right now, yes.
If we want to transfer, like, from wages to...
And you're transferring more than 3% at the end of the year. I mean, your town meeting can do it, but the FinCom and the select board at the end of the year can't. Not right now, it's 3%.
But the bill is going to get rid of that.
It's going to get rid of that. Right.
Oh, okay.
Yeah, right now, under the statute, there's a 3% cap. We propose goodbye cap. Okay.
We never did the cap existed.
Well, there is a cap, yeah. I didn't hear that. Yes.
Do you want to take more questions now?
Why don't I answer the questions on this transfer, and then if we can move on, because we want to make sure we got everything covered. And we should have time at the end for questions, yeah.
So this is only at the end of the year?
Yes, this is the end of year transfer procedure. The end of the year is defined as May 1 to July 15th. It goes back to municipal relief, and one of the old municipal relief bills, I think it was the 2006 one. And the idea is that at the end of the year, you're kind of closing your books, and you want to make sure that there are no deficits that have to be funded in any accounts. And you have surplus money in a particular line item. You didn't have the opportunity to get that on the warrant for a town meeting. You can do this at the end of the year and kind of get everything in balance before the books finally close for the year. Okay? Did that answer your question?
Most of my question was going to be, could you articulate a situation where you'd want the town to have that flexibility? The limit makes sense to the extent that if it's over a certain amount, the town or city may want to have input on what's being transferred. So could you articulate a situation you guys are thinking about, or that was being thought about, to move the cap and you'd want to make sure the town could do?
Well, it was one of the things that came up in the survey. So there are obviously some communities that found the cap restrictive at some point in time. So that was part of it, yep.
Or we're having too many special town meetings at the very end of the
Yeah,
year.
yes.
Can you move between salary and expense?
Yes, those are departmental line items, sure, yep. Right now, under the current law, and you will be able to in the future as well. Okay, so the next two have to do with financial management. So all of you know, communities can't deficit spend in the ordinary course, right? You can only spend in accordance with an appropriation. There are some exceptions, of course, and the two major exceptions are that you can spend in the case of a declared emergency, a natural or man-made emergency, and you can do deficit spending to pay final court judgments. So right now, in both cases, you have to get our approval to do so. Why? Okay, we're going to give you the approval. I mean, what, we're going to tell you, you've had, there's been a hurricane or sadly the tornado that was out here several years ago, and you're not going to be able to deficit spend? Of course not. So it really the approval makes no sense, to be honest with you. So in addition to that, the emergency provision requires a declaration of a local emergency by the select board or the city council. Why? In the case of a situation where the governor has already declared an emergency that covers your area. So first we deal with that. If the governor has declared an emergency, there's no necessity for declaring a local emergency. You can deficit spend immediately. Second, we expand the final court judgment. We propose expanding the final court judgment exception to include payments to various state and federal adjudicatory bodies. The Mass Commission Against Discrimination, if a claim is made there and you have to there's a final award to someone, or any kind of other federal and state adjudicatory bodies. Right now, and a lot of times have changed, and a lot of legal claims that your community has are really resolved and decided in these adjudicatory bodies as opposed to in court. You still have some of those, but a lot of them are resolved in these adjudicatory bodies. So this would enable you to make those payments immediately as required by the decision of the body, and fund that by the time you set your next tax rate. You wouldn't have to come to us for approval. Your municipal council just has to certify that the claim is owed, it's final, there's no appeal, or your community is not planning to appeal, and then the treasurer would be able to make the payment.
Does that mean even if it exceeds the 2.5, Prop 2.5 cap?
Well, you're not exceeding Prop 2.5, you're just paying cash. You're going to have to fund that eventually within your levy limit. Right. It's really more a cash flow thing. You have to have the cash generally. If it's going to be a huge judgment, the treasurer is probably going to have to go out and borrow to get the cash for it. Yeah. We're going to give you more, the bill we propose to give you more flexibility with respect to expenditures and borrowings in anticipation of state and federal grants. As you probably know, there are two types of grants. One is where you get the money in advance. It's set up in a separate account, and then that's the financing source that can be spent without appropriation for purposes of the grant. The other type of grant, which at this particular time is more common, is the reimbursable grant, and that's where you have to upfront the money, and then you submit some documentation to some federal or state agency, and you get reimbursed after the fact. All right? So there's always a cash flow issue there as to whether you have the money, but we're proposing to allow you to spend without appropriation in both cases once you have the grant commitment in hand. All right? So this will sort of work like the Chapter 90. We certify that there are available funds. You don't have a check in hand yet, all right? But you can start spending from it. And it will be essentially that will apply to any state or federal grants. So you don't even really have to worry what type of grant it is, whether it's an advance or reimbursable grant. If you qualify, if you have the grant commitment, you can start spending. And then really the issue will be the cash flow, and your treasurer will have to work with the appropriate local officials on that to make sure that the money can be available. And then you will account for the money once it comes in. Yep.
Will this change the way towns end up having to vote for things like school building authority?
No, that's different because you have to, no, because that's a little different because the school building assistants, there's a specific, you have to borrow money for that. And the school building grant they pay up the front costs, as you know, and then you have to pay the rest. So it won't change that. This is more like for things like the FEMA grants and Chapter 90 grants and things like that.
So
Yep.
Chapter 90, for example, the select board could do a job without going to...
Right, or whoever the DPW, director or commissioners, whoever's in charge of that.
You don't need the legislative authorization.
You won't have to get a legislative, once you have the authorization, the commitment in hand, you're going to get, $50,000, whatever you're going to get, you can start spending it.
Yeah,
Yep.
but sometimes we have to, we get involved, we got to cover that $250,000. We borrow money and it's just
Right, well, that's what I'm saying. It's really more a cash flow situation, but there's no issue about your authority to spend. You don't have to go back and have a special town meeting to authorize the spending. You can start spending it. There's always an issue about the cash, for anything like that.
So
Yep.
I have a quick
Yep.
moderator interjection.
Sure.
We probably have like 10,000 years of collective municipal government experience in this room, but I know people are going to have a lot of questions. Are you hoping to actually, the two of you, speak on every one of these slides? Because if so, we have to start moving.
We gotta move, I know.
That will suppress the comments. What, you are not? You are not hoping to?
I'm just going to do it really quick. I've got like 5 minutes left because I have to turn it over to Lauren.
Questions, if possible, for a little bit.
All right, so there's a lot of proposals about borrowing here. I won't go into detail on all of them because they're extremely complicated, other than to say we did take the suggestions of local officials plus our own to try to rationalize, I suppose is the way I would use it, or simplify in some cases, a lot of the borrowing statutes, particularly the statutes that lay out all the purposes for which you can borrow. Some of them have lengthy, detailed, line after line, clause after clause. We tried to consolidate them a bit and make them more simpler, and also deal with some situations that are articulated here that seem to be common issues that communities have gone to the legislature to get special acts to authorize them to borrow about. Why? Why is that necessary? We just made sure that there's general authority to borrow for those purposes. We also extended the period of time that final court judgments that you can borrow for. Right now, under the statute, it's a 1-year term, which really, for a large judgment, just doesn't cut it, as you can imagine. And a number of communities have sought special legislation to extend that. In this case, you could go to the Municipal Finance Oversight Board and get an extension of the 1-year term. Depending on the amount of the borrowing and how the debt service fits in and enables you, with respect to your budgetary situation and your ability to provide services generally. Okay. We did a lot to streamline how bond premiums are handled and to make it more consistent with federal tax law for obvious reasons, because these are tax-exempt borrowings. We did some things. There has been some legislation proposed to extend the period of time for which municipalities can issue temporary debt, so-called bans. Right now it's 5 years. This would extend it to a 10-year period, which makes sense for a lot of communities that may be borrowing small amounts for equipment and through the State House note program. Sometimes it makes more sense to just, keep issuing a note rather than issue a permanent bond. In the special funds area, we have a number of proposals that we think will be extremely helpful to municipalities in organizing different pools of money that they have. One is in the area of the OPEB special fund. There is a statute right now that allows, it's a local option that allows community to create a so-called OPEB fund. However, it really is nothing more than a glorified reserve or stabilization fund. It's not clear under the statute that the municipality has the authority to establish a trust fund that is compliant with the Government Accounting Standing Board requirements and IRS requirements. So this proposal makes it clear that is the case. Creates a default trustee, but then gives the community flexibility to to set up an arrangement, a trust arrangement that will be suitable for that particular community. And this was legislation that was developed with a whole group, and hopefully will be extremely helpful to communities going forward. A number of you may have situations in your community in the past and in the future where under your zoning laws, a developer may be required to perform certain obligations, or in lieu of those, give you a cash payment. Typical examples are the developer is building housing. It's required to either provide affordable housing on-site, off-site, or make a payment to your affordable housing trust fund. Or a commercial developer is required to have a certain number of parking spaces on-site, or give your community a cash payment to be used for municipal parking. Right now, all that money goes into the general fund. It's very complicated to be able to directly access it, to spend it for this purpose. We have a proposal to let that money be segregated and spent without appropriation for those purposes. I've got about 2 minutes. Special injured on duty, the injured on duties statute, Chapter 41, Section 111F, for injured police and firefighters. Right now, if you have such officers, you are paying them their benefits from your salary accounts, thereby depleting them, and not having funds readily available to hire replacements or pay overtime for the other officers to do coverage. So we're proposing that to allow your community to set up a special fund to appropriate money into, and also to put any insurance or third-party restitution payments you get with respect to those injuries into the fund, and have those available to pay the leave benefits as well as to use for replacement officers. Okay, I'm going to skip over. And go to this collections one. You can look through the handout, and we'll be here and we'll be answering, and I'm willing to stay and answer any questions you have about some of the other proposals, and even the ones that we're not even talking about are on the slides that you may be aware of. So let me just talk about a couple of proposals in the collection area that I think are pretty significant for the communities. One is that right now, your community's collector or your community can adopt a local option that will allow your community to deny, suspend, or not renew various licenses and permits of people who are delinquent in their taxes. The statute requires that the person be delinquent for 12 months, though, before the statute can be invoked. And under our proposal, your community will be able to choose whatever length of time you want to. So if you want it to be 12 months or even 24 months, or a lesser period of time, like 1 month or 6 months or 3 months, your community will be able to do that in the implementation bylaw that is already required by the law. We propose to expand the small claims jurisdiction right now, small claims actions to collect outstanding personal property taxes. The account has to be under $7,000. So we're proposing to expand that so your collector could go into small claims court to collect any personal property account, regardless of the amount. And we're also doing some things to clarify, streamline, simplify, make more uniform many of the different lien statutes that exist that allow your community to create liens to secure the payment of various municipal charges, utility charges, water, sewer, trash, other kinds of charges and fees that you impose that are related to property or for which the assessed party has property that could be liened. So we tried to look at all of them, tried to make sure that all of the procedures are the same processes are used for all of them, so that makes it simpler both for the local officials, it's more efficient, and also it's easier to explain to property owners as well in terms of their rights and obligations under these different statutes.
Half-hour warning.
So with that, I'm done. I'm going to turn it over to Lauren for her presentation, and then hopefully we'll have more time at the end for questions. Thank you.
Thank you, Kathleen.
Great. So thank you, Kathleen. So in addition to the many changes to municipal finance laws, this bill includes a number of other proposals that I will highlight briefly for you. So liquor license reform, this is something that we heard over and over again from municipalities. It's really an economic development issue. And our proposal would allow municipalities to set the quotas for liquor licenses issued to facilities such as restaurants and other facilities that allow on-premise drinking. So we believe, our thought behind this is we believe it should be up to the community to decide what the right number is for their municipality. Unemployment insurance reforms. So the bill would extend existing unemployment benefits exemptions Currently, the exemptions only apply to school employees that are absent during sabbaticals or school vacations with a reasonable assurance of returning to work. Our proposal would extend this exemption to employees who provide services to or on behalf of schools that are paid by municipalities. So this includes bus drivers, crossing guards, food service workers, and custodians. So our proposal would also reduce the amount of unemployment insurance benefits to 65% for those employees that are also receiving government pension. Double pole enforcement. So our proposal would empower municipalities to enforce the statutory prohibition on keeping double poles up for longer than 90 days. So we think this is really, it's more than an issue of aesthetics, it's also one of public safety.
Who's going to do the enforcement?
So I think we would give it to the municipalities. Do you mean who within the municipality?
Generally, it's the select board, I believe.
Yeah.
They're going to send us
In most communities.
They're going to send us a couple citations, or?
It sounds like you're gonna have to pass a local
We're
ordinance.
going to
Yeah.
have to pass a local bylaw, or?
Yes, yes. So it would you could only take enforcement action once you receive a local ordinance.
I suspect it's one of those non-criminal disposition ticketing things. Is that what you're looking at?
Yes.
Yeah.
I'm sorry, I didn't hear.
Is it going to be like where you have to adopt it for non-criminal disposition ticketing?
It would be similar,
Yeah.
yeah. And I
So
think
you'll
in
have to
most
adopt
communities,
this.
it will end up being the select board, because the select, in towns, because the select board is the one that issued the licenses for the, the poles to be cited. Or unless, there could be in some communities, particularly in cities, it could be another, border officer. But obviously they're in violation of the original citing license or permit.
So procurement changes. So the bill proposes several procurement changes that will facilitate streamlined procurement of construction. Specifically, would raise the dollar threshold on the use of the Operational Services Division's statewide contracts for both horizontal and vertical construction related activities up to $50,000. So the increased threshold is a more realistic limit for routine repairs and maintenance for both horizontal and vertical construction. In addition, the higher dollar threshold streamlined the procurement process by eliminating the public notification requirement under specific circumstances. The bill requires municipalities to post notices in combis or in the central register. This effectively removes the costly requirement to post notices in the local newspaper and provides the municipalities with a free alternative option that also provides exposure to a broader base of vendors.
Excuse me, that's just obtain 3 quotes, keep a record of the fact that you did it, and that's it.
Yeah, I believe
Which
so.
one are we talking about?
The procurement.
Less than full competitive bidding is
Yes.
defined as
Yes.
what?
Yeah, so you can do an informal type
3 quotes, keep a
solicitation,
record
an
of
informal
it.
type solicitation, yeah.
Okay.
You always can competitively bid in any situation.
So E-Citations. The bill makes several changes to Chapter 90C, which is the law governing motor vehicle violations. The change would allow for the implementation of a new E-Citation project that's currently being implemented by the Executive Office of Public Safety and the RMV. The changes would allow for municipalities to become more efficient through the electronic issuance of citations. I'm feeling that.
They said unless you don't have broadband.
Well, keep hoping.
Take more than that.
I know, we know.
So finally, our bill makes several changes to elections. It would give municipalities greater flexibility to administer elections, such as reducing the amount of time municipalities must hold open voter registration on the last day of voter registration. So for municipalities with less than 1,500 voters, they would have to at least stay open between 2 p.m. and 5 p.m. If you have greater than 1,500 voters, the time requirement would be 9 a.m. to 5 p.m. Right now, municipalities must keep voter registration open until 8 p.m. And we heard from municipalities who had concerns that nobody was coming in and they were still required to stay open. So in addition, it would allow municipalities to use electronic poll books, and finally gives presiding officers discretion to determine the most expedient manner to conduct a dual checkoff.
What's an electronic poll book?
So,
So it's, as we understand it, it's right now that, you know, when you go in to vote, you've got the book, then they're checking you off all manually, and then when you come back and you give your ballot, and check it off again, all right? So this would be able to be used some sort of electronic process to do the check-in and the check-out. Now, you know, the technology is, I think, not completely developed yet, and obviously the Secretary of State would probably, you know, this would be something that would have, just even under the existing statute, have to be certified, just like the different ways of voting machines, you know, are kind of, they have to meet certain standards and are certified by the Secretary of State. But it is something that is probably coming, you know, the way the technology is going. But I don't know about you, but, you know, everyone listens to check off, you know, and they're flipping through the pages, you know.
But this doesn't include electronic voting at town meeting.
Not right,
Different.
no, that's different, which you could do now on your, you know, if you wanted to do it. I understand there are some towns that have gone to that.
We do.
Yeah.
So we have two questions, quick questions. Michelle?
Who picked those hours? They're not for working people.
Right.
I mean, 2 to 5? Who's home from 2 to 5?
so this is just the minimum requirement. A municipality can stay open longer than this, but this is the minimum amount of hours that a municipality.
But what if the town clerk is going to go by that? How does it, how are you helping the general?
Well, we heard from town clerks that virtually nobody comes on that last day.
This is
This
just
is
the
only
last day.
day.
Okay.
Because remember, they have to do a Saturday, I mean, they have to have voter registration
Yeah.
open for, you know, what is it?
Right.
Almost 3 weeks, right? And it has to be at least one Saturday that I'm aware of.
Okay.
So this is just on the very last day.
So, as I said, this really just highlights a few of the proposals in the bill, but the bill has 249 sections, so it would be kind of impossible to go through every single proposal, but we're happy to answer any other questions that the group has.
And can you summarize, as of Tuesday, my memory is that the bill was turned into 5 bills.
Yep.
When
Yep.
4 of them have come back from committee, one is
Sure.
pending.
Sure. So right now, the bills that the committees that referred it out, so there's 4 of the 5 have already reported it out favorably, and it now moves on to House Ways and Means. The one committee that has not acted on it yet is the Committee on Municipalities. We're anticipating, they filed an extension order, which is a procedure that they do if they're not going to be able to meet the bill reporting deadline, which is back in March. So they have an extension till May to act on the bill. The Municipalities Committee has a lot of the major proposals, so we're really hoping that, we see these proposals come out favorably from the committee. Once it goes to House Ways and Means, the House will be the first legislative branch to take the bill up. Then it will move over to the Senate. And then, we hope to see it on the governor's desk by the end of the legislative session, which ends at the end of July. So we would encourage you to, if you're supportive of some of these proposals, to encourage your local, your elected officials to act on this bill so that we can see it get done.
Do you anticipate this?
Joe?
Thanks. I just want to make a statement and thanks. Some of you know me, I work with FRCOG, but I spent 15 years working with Kathleen over Division of Local Services. And we've had many conversations about legislation like this in the past, and the administration will always come down and say, well, it just doesn't have enough second field, we're just not going to do it. And I think that this administration, both at the governor's level and the ANF and Commissioner Sean Cronin all deserve credit. And people have to realize this is a huge piece of legislation. It's a huge amount of work that was done, and it's going to be so good for communities when it's completed. So I just want to say thanks, because I'm working in towns now, and I
No, because the there's a general law that Massachusetts has adopted, the Uniform Electronic something Signatures Act, which applies anyway. So we didn't need to do that because that overlays all kinds of private and public transactions. Yeah. So we've already said you can use electronic signatures, and I think most of you probably are for the day-to-day operations where you're transferring information among departments and so forth. You know, you have to have certain internal controls, obviously, for who has access. It's really no different than if you were using the old signature stamp or whatever. I mean, you have to have the proper internal controls.
Jackie?
When the reval goes from 3 to 5 years, is the Division of Local Services going to give us guidance for our specialized properties that we go out and we have appraised outside of the regular revals, process?
I'm not entirely sure.
Okay, so we have a hydroelectric facility.
Yes.
We appraise it every
Okay,
3 years
yeah.
outside of
All right.
regular.
So our review, we would only be reviewing that, and you don't have a pilot agreement. You're assessing the regular property taxes. So we would be reviewing that every 5 years. So you could, and that would be up to you as to whether or not you wanted to have a full-scale appraisal on a more frequent basis, or, as in many of these cases, you would kind of come up with a evaluation approach that, hopefully avoids litigation on the value. But we would only be reviewing it every 5 years. So we would be reviewing your appraisal documentation for that every 5 years. Yeah.
We've got you at the top, and then Art.
I'm interested in the E-Citations, but sort of in a general sense. Is the process that someone at the state level comes up with standards, but then private companies develop software that meets those standards, or is that how does it work?
So I believe it is up to the RMV to develop the standards to kind of regulate the process of e-citations. And I believe that also the process by which, the exchange of each citation is received from the police station and gets to the courthouse and gets to all of the relevant players. But I don't know if that answers.
My question is coming from the fact that there's motor vehicle citations, but I'm in Montague and we're in a situation where we've got some department heads who are more interested in using the computer who, for example, looking for Board of Health citations or building code violations.
I think, stop me if I'm wrong, but isn't this one only applying to
Yes.
registry of motor vehicles?
This is applying to motor vehicle citations, which right now your police officers have books. You ever seen these with the multi-part things?
Right.
Okay, they write it out and then you send one to
Well, I
this
guess that's
person,
my
one to
question.
the,
Is this
they
gonna
give you
be a piecemeal
one on the
approach?
road while you're, for your speeding, and then they send them all to different, they send pieces of paper to the registry, to the court. It's all going to be, the idea is eventually to have it all.
I get that, that's a great idea, but I'm just saying, right now, we're sort of looking at a very piecemeal approach, where one department says, I found some great software to do this.
Right.
Someone else comes and says, I found some wonderful software to do that. Do they talk to each other? I don't know. And it seems like down the line, if we're talking about modernization, in some sense, a citation is a citation is a citation. Is there any thought at the state level? This is just a question to have a kind of generalized approach to standards that, so rather than have a bunch of different systems that basically don't talk to each other, that work really well for their specific purpose, which we've been through, have the goal be to have as much as is practical different systems to be able to communicate. So if you know that someone's got, it's probably a poor example, but they have a lot of parking tickets, but they also have problems with the place they live.
Well, I would think that on the part, I think since these ultimately get collected by the registry, and turned over, it's very much like the parking tickets, which the registry gets notified over, and if people are delinquent in their motor vehicle excise, all of it goes to the registry at some point if people don't pay those obligations so that they cannot renew their registration. So there is some similarity, at least with respect to those things. I can't really, I'm a little bit out of my league as to making any, comments about what might be on the radar with respect to state technology proposals or whatever?
Kathleen, there is software out there. GOTMS is one example where it consolidates all the permitting and chooses a vehicle for each department can go in and check whether somebody is delinquent and make the payments so they can withhold a permit. So there is software out there. It's not real expensive either.
Yeah, and we can get you more follow-up with more details of the project. This is a project that's really being run by the Executive Office of Public Safety and the RMV together. I know that there is a goal, I said it was RMV, because actually the Executive Office of Public Safety, that is the authority that will be in charge of setting standards, regulations to set standards for e-citations and the associated equipment. So I don't want to speak out of turn, but I think that it is the goal to come up with an integrated system that could talk to different portals. But I'm happy to follow up to get you the further details on that project.
Okay, we have one more question. So we got, yes, Art, and then.
My name is Art Schwanger from Heath. You've talked a lot about advances in technology as the basis for much of this. Will there be any provision for those communities which do not have ubiquitous broadband that can't actually implement much of this? How will this be implemented so that it's not an additional burden to the towns?
Well, the municipal finance provisions don't require any new technology, really. Okay, I mean, the reason we're going from the 3 to 5 year, I think that's where I commented most about that. It really has to do with your local assessors. If they're not, I mean, they must have a computer-assisted mass appraisal system that they're using for their valuation, or they have a vendor that's doing it. So that's just going to change their schedule when they complete a major review for certification purposes. But most of the other municipal finance provisions, you know, they're going to make your life easier, but they don't require any new technology really to implement. Whatever systems or procedures or policies that you have now in terms of how you operate, you can continue to, you know, benefit from the expanded and increased flexibility within whatever capabilities you currently have, and hopefully you'll have expanded capabilities in the future.
And just to piggyback on that answer, I think that some of the changes that we did make to contemplate electronic use or method, we did not kind of eliminate the alternative, which was either by paper form or whatnot. It's just that the statute, as Kathleen mentioned, some of them dated back 50 plus years, and so they didn't even contemplate the use of electronic anything. So I think that where the statute strictly said, like on paper or this form, we just added and electronic so that we could expand the process.
Assuming this gets signed, when does it become effective? The reason I'm asking is because I'm from Holly and we're in a situation where we've used up our 5 years in November, and we're going to have to go to long-term bonding on Hurricane Irene expenses. We'd love to be able to keep going short.
To use the 10-year, yeah. Well, it depends. There are some provisions that we had very specific effective dates for. For example, anything that related to taxes, we set out, you know, a date in advance because you need, because the way the taxes, you know, taxes are assessed at a particular time for fiscal year. The state-owned land change, we're going to do the 2017, and then the current statute will be repealed and the new one will take effect. So there are a number of provisions like that. The rest of them, most of these provisions can go into effect whenever the statute goes into effect. And I mean, I don't contemplate, I mean, I don't know what the legislature is thinking. I don't really think there needs to be an emergency preamble because we do want to have a little time to get out to people the information and to implement it, but we'll have to see, you know, through the legislative process whether the rest of the provisions would become effective immediately or would take the usual 90 days.
But so even if it did, but to answer his question, if it's signed by July 1st,
yeah, when do you have to renew?
90 days, he might be.
Or when do you have to issue a permanent?
Sometime in November.
Yeah. Well,
we might make it.
Might make it. Yeah.
Yes, sir.
No, it's very hard for non-experts to find Massachusetts statutes. They're scattered all over the code. And this is a fairly massive, it sounds like a fairly massive restructuring of your finance-related laws. I wonder if when you were doing it, you thought of trying to centralize and reorganize the DOR-related statutes in a way that's more organized than I think.
Well, that would be a bridge too far, I'm sorry to say. There are many other proposals that we thought of, but you know, there are some limits on what you can do. This is the first step, okay? So maybe there will be opportunities to do some other things. The reorganization of the general laws, that is a very, I can tell you as a lawyer, a very substantial undertaking. So, and you need to have buy-in from the legislature and whatever too. So that was really not part of our contemplation here. I can tell you that this will make significant changes, obviously. Sometimes the changes get put timely into the legislative site, and sometimes they kind of lag a little bit behind in getting their changes up. But definitely, we hope in our budget, so this will be on the governor's desk in July. Most of the changes will go into effect probably in the fall, others next year. And then we hope to publish next year a new, have our red book with the municipal finance laws in there. So if you have any issues with that regard, though, please call the legal staff of the Division of Local Services. We run an attorney of the day service. And all of these proposals, as part of doing that, we had to, go through and take the existing statute and make the changes in it. So we're very familiar, all of the lawyers on our staff are very familiar with the specific changes that are made, and we can walk you through any of them if you have any questions about it.
Will it be an IGR?
Will be many IGRs, Joe, many IGRs. Yes.
On the 3 to 5 year reval, on average, a third of us here have got an FY17 reval. Shall we assume now that we could bump this up 2 years?
I think the 17s will probably be 17s. I don't believe, but I think that was one of the sections where we didn't make it effective until FY18. And I can tell you that the Bureau of Local Assessment is already hard at work coming up with a possible map and as you may remember, a few years ago, we did some reorganization along those lines too, trying to align communities that were located near each other or had the same vendors, get them on the same cycle. We were given statutory authority to do that. And they are previewing this at various assessor association, meetings and have previewed it already, I think, with the Assessors Association, Executive Board, and Policy Review to get their take on it, and then we'll be speaking to various, assessors meetings and so forth to kind of let people know what the thinking is and get any feedback before a final determinations are made. You've got a question over here?
In relation to that, this is most impressive. You, I believe, have folks that provide support services to cities and towns that don't have their in-house staff. Will that continue?
Well, we have, you mean in the assessing function? Or just generally technical assistance? I mean, yes, we have a unit called our Technical Assistance Bureau that provides essentially free consulting assistance to go out and do what we call financial management reviews of communities. You can ask for sort of specialized or more targeted reviews. Right now, it's engaged in doing a lot of the municipal compact program, best practices reviews in terms of going out and assisting the communities. They signed up for a community compact. They wanted to do best practices in, say, capital planning. We're one of the sort of vendors that are out there helping communities with those particular projects.
So that will continue?
Oh, yes, absolutely, absolutely. We're continuing that. More question? Yes.
I have two questions on OPEB. There's a slide on that. It says enables creation of trust fund compliant with IRS and GASB. So for towns or cities that have already established it in the past, what would have to happen? Is that automatically transition?
No, they're grandfathered.
Okay. And then it says it clarifies custody, investment, appropriations in and out of. Where could I concisely see the existing language on that, and then what the clarification contemplations are?
If you come and see me afterwards, I'll give you my card with an email, and I'm happy to give you a red line of legislation. It does a lot. I think really clarifies a lot of issues. There were also some what I think most of us would think of as local governmental entities, that there was some ambiguity in the accounting community as to whether or not they could create funds under that statute, because they actually are not covered by Chapter 32B. They're covered by 32A, which is the statute that covers state employees. So, so we added them. That this would be your housing authorities, your redevelopment authorities, your councils on government, and some other entities, regional entities that we would think of as really more local entities.
Other questions?
And the other thing is that these, and some of these are smaller entities, and they could, in effect, go in with a larger entity. So if you had like a redevelopment or housing authority, it could go into the fund of the community, all right, and be able to pool those monies, particularly for smaller communities. Some smaller communities could go together and pool their money and have enough to be able to invest with the state benefits trust fund too, because there's a minimum requirement.
Yeah, that's a
for
good
that.
one.
Yeah.
Kathy,
Is there more in this law than, I mean, this is an awful lot of stuff. Is there more than was presented today?
Oh, absolutely.
And sort of make sure that there wasn't more than we did.
On our website, and actually on the governor's website, legislative site, and ANS website, there is a section-by-section summary of the law. So you can go onto the Division of Local Services website. It's right on the front page. I think there's a link right there.
Kathy, we passed it out at like the last second to last council meeting.
Didn't get it the last one.
And Michelle,
My
question too.
Okay,
Go to the other question. Very good. So if there are no other questions, you sound like you'll be here if people want to dig in.
Yeah, sure.
Thank you all very, very much.
All of our productions at GCTV are brought to you in part by The Arbors at Greenfield, assisted living community providing a unique balance of independence and personal care that offers residents and families the most precious gift of all, peace of mind. Bay State Health, providing the care you and your family need when you need it close to home. Visit them online at baystatehealth.org. Greenfield Savings Bank. Visit them at 400 Main Street in Greenfield. Call them at 774-3191 or go online to greenfieldsavings.com. The Hammond Family. The Hammond family are longtime supporters of Greenfield Community Television. New Fortune Chinese Restaurant on the Mohawk Trail in Greenfield. Visit them online at newfortunema.com, call them at 773-0838, and check them out on Facebook. People's United Bank. Located at 45 Federal Street in Greenfield. You can call them at 774-3713 or visit them online at peoples.com. Thank you to our sponsors for supporting all the productions at Greenfield Community Television.